Good morning, everyone. Good morning. Good morning, Ayush. Good morning, Vaishali. Good morning, Hitesh. Chalo. Do you have any queries regarding our previous sessions? Okay. Chalo. Our next section is deduction in respect of donation for scientific research in rural development. See, this you have already studied in PGBP under section 35. Under section 35. But section 35 is applicable to those assessing who have business income. You have started in section 35 that if an assessee having business income and the assessee has donated any amount for scientific research to any approved institute, university or college, then he is eligible to claim 100% reduction of revenue expenditure as well as 100% reduction of capital expenditure, right? But what if an assessee does not have any business income and he contributed for scientific research or rural development? Then what happened? Then those assessee can claim reduction under section 80GGA. Okay, so here eligible assessee means any assessee not having income chargeable under the head PGBP. Why? Because whenever a person is having income from PGBP, then he is eligible to claim this deduction under section 35, right? And here any assessee. So assessee can be any company, firm, AOP, or anyone who make donation for scientific research or rural development. Donation qualifying for deduction. Now, which kind of donation are qualified for deduction under this section? So, any sum paid by the assessee in the previous year to research association, which has as its object the undertaking of scientific research, or to a university, college, or other institution to be used for scientific research. Such association, university, college, or institution must be approved under section 35, subsection 1, clause 2. So here what happened, my dear friend, here those universities must be approved under section 35. So they have to take the certificate from government, from CBDT, that they are approved institute. Okay. Now next is any sum paid to research association which has its object the undertaking of research in social science or statistical research, university, college, or other institution to be used for research in social science or statistical research. Such universities must be approved under section 35. Any sum paid by assessee in the previous year to an association or institution which has as its object the undertaking of any program of rural development. That means those universities or college who are undergoing the program of rural development to be used for carrying out any program of rural development approved by prescribed authority for the purpose of section 35 CCA. My dear friends, this all section you have studied in PGBP. Or to an institution or association which has as its object the training of person for implementing program of rural development. It has been clarified that the deduction to which an assessee, that is the donor, the giver of donation, is entitled on account of payment of any sum. There is no statutory limit. To research association or university or college or other institution for scientific research or research in social science or statistical research. or an association or institution for carrying out the program of rural development, or shall not be denied merely on the ground that the subsequent to payment of such sum by the assessee, the approval granted to any of the aforesaid entity is withdrawn. Meaning thereby, say for example, Mr. X give donation to approved university. After donation, if CBDT or government cancel the approval, right? After donation, the CBDT or the central government cancel the approval. So on the basis of cancellation of approval after payment of donation, cannot say that the assessee is not eligible to claim donation, right? He can claim donation. Next is any sum paid to a public sector company or local authority to an association or institution approved by the National Committee for carrying out any eligible project or scheme. Here also, it has been clarified that the deduction to which an assessee is entitled on account of above shall not be denied merely on the ground that subsequent to payment of such sum by the assessee, the approval granted to any of the aforesaid entity is withdrawn. Same, if you are giving any donation to any approved public sector company and after your donation the approval is cancelled or approval is withdrawn, then it is not your fault. Why? Because whenever you give the donation, the university or the public sector company or the research association is approved, right? So you cannot deny to claim the deduction or the notification notifying the eligible project or scheme carried out aforesaid entity has withdrawn. Any sum paid to rural development fund set up and notified under section 35 CCA. Any sum paid by assessee in the previous year to National Urban Poverty Eradication Fund. Restriction on deduction. Restriction on deduction. No deduction under this section would be allowed in case of an assessee whose gross total income include income which is chargeable under the head PGBP. So it is mentioned in eligible assessee. Yes, Hitesh. Eligible assessee, that this section is not applicable to those assessee who have income chargeable under the head PGBP. Why? Because they are eligible to claim reduction under section 35. Where a deduction under this section is claimed and allowed for any assessment year, deduction shall not be allowed in respect of such payment under any provision of this Act for the same or any other assessment year. So if you are claiming deduction under this section, that is 80 GGA, then you cannot claim the same deduction under any other section of Income Tax Act. No deduction shall be allowed in respect of donation of any sum exceeding 2,000 unless the sum is paid by any mode other than cash. So if you are paying donation in cash, then you are eligible to claim deduction only up to 2,000 rupees. Say for example, Mr. X gave donation of rupees 10,000 to approved university in cash. Then he is eligible to claim donation deduction under section 80 GGA only up to 2,000. But say for example, if the same is paid by way of check, then he can claim the deduction of 10,000 rupees. Okay. The claim of assessee for deduction in respect of any sum referred to under donation qualifying for deduction in the return of income for any assessment year filed by him will be allowed on the basis of information relating to such sum furnished by the payee to the prescribed income tax authority or person authorized by such authority subject to verification as per risk management strategy formulated by CBDT from time to time. So here what this is that, say for example, if you are providing donation to university, then in that case, the university has to report to income tax department or CBDT that this person has given donation to us. So CBDT can cross verify the donation amount claimed by you in your return and donation amount reported by the approved university. Okay. Chalo, just I'll give you 1 minute, just go through the provision. Just go through the provision, everyone, and if you are having any doubt, just let me know. Restriction on point number 3. See, point number 3 says that you have to give donate to, if you want to claim deduction under 80 GGA of full amount, then you have to give donation by any mode other than cash. So you can give donation by electric transfer, by NEFT, RTGS, by way of check, etc. But if you are giving donation in cash, then you can claim deduction. Then you can claim reduction of that donation only up to 2,000 rupees. So say for example, Mr. X give donation of 10,000 in cash, then he is not eligible to claim full deduction. Why? Because he has given donation in cash. So if Mr. X want to claim deduction, then full deduction, then he has to give donation by way of check. Clear? Yes, ma'am. Yes, Mohammed. Chalo, next section is section 80 GGB. Reduction in respect of contribution given by companies to political parties. Reduction and condition. This section provides for deduction of any sum. This section provides for deduction of any sum contributed in previous year by an Indian company to any political party or an electoral trust. However, no deduction shall be allowed in respect of any contribution by way of cash. So say for example, if a company can give donation or any contribution to support political party, okay, then in that case, the company can claim reduction of that donation under section 80 GGB from its gross total income. But if a company give donation to political party by way of cash, then the company is not eligible to claim deduction under section 80 GG. Meaning of contribute. For the purpose of this section, the word contribute has meaning has the same meaning assigned to it under Section 293A of Companies Act 1956, now it is 2013, which provides that a donation or subscription or payment given by company to a person for carrying on any activity which is likely to affect public support for political party shall be deemed to be contribution for political party. So to support political party, if you are giving any amount to political party, or else if you help in any way, say for example, you are say if you are in advertising business, then you promote the political party in your news channel, okay, then that is also treated as contribution. Or if you are taking any subscription from political party, the expenditure incurred directly or indirectly by a company on advertisement in any publication. If you are giving advertisement of that political party in any publication, being publication in the nature of souvenir, brochure, tract, pamphlet or like, by or on behalf of a political party or for its advantage, shall be deemed to be a contribution to such political party or a contribution for a political purpose to the person publishing it. Meaning of political party means the political party registered under Section 29A of Representation of People Act 1951. So say for example, ABC Private Limited or ABC Limited has given donation of rupees 3 lakh to political party, registered political party. Then ABC Limited is eligible but by way of check. Then ABC Limited is eligible to claim this deduction from its gross total income. Okay, under Section 80 GGB. Clear? Illustration number 15. During the previous year 21-22, ABC Limited, an Indian company, contribute a sum of 2 lakh to an electoral trust. Is it eligible? Yes. And incur expense of 25,000 on advertisement in a brochure of political party. Any kind of advertisement is eligible? Yes, Somesh. Is the company eligible for deduction in respect of such contribution or expenditure, assuming that the contribution was made by check? If so, what the quantum of deduction? Chalo everyone. Give me the answer of this question. Is the company eligible? Yes or no? And if eligible, then the amount of deduction. Chalo. Quickly. Very good. Right, Akshnil. Chalo, other answers. I am waiting. Chalo everyone. Ayush, what is your answer? Rekha, what is your answer? Pooja, Mohammed, what is your answers? Everyone. Eligible for whole of 2,25,000. Right? Chalo. Just go through the answer once, then after that we will discuss next section. Everyone just go through the answer. An Indian company is eligible for deduction under Section 80 GGB in respect of any sum contributed by it in the previous year to any political party or an electoral trust. Further, the word contribute in Section 80 GGB has the meaning assigned to it in Section 293A of Companies Act 1956, and accordingly, it includes the amount of expenditure incurred on advertisement in a brochure of a political party. Therefore, ABC Limited is eligible for deduction of rupees 2,25,000 under section 80 GGB in respect of sum of 2 lakh contributed to an electoral trust and 25,000 incurred by it on advertisement in brochure of political party. Yes, all the advertisement expense related to political party is eligible. Not for personal purpose. If company is giving advertisement for promoting its product, then in that case you can the company cannot claim reduction under this section. Okay, if the advertisement is related to political party, then only company can claim deduction. It may be noted that there is specific disallowance under section 37 subsection 2b in respect of expenditure incurred on advertisement in a brochure of political party. Therefore, see, first you have to disallow the expenditure debited in your profit and loss account for advertisement as an advertisement expense, and this advertisement is related to advertisement of political party. Therefore, expenditure of 25,000 would be disallowed while computing business income or gross total income. However, Devraj, I have already explained the full provision, and just I am giving you how to write the answer in your exam. However, what is your doubt, Devraj? Please let me know. Would be disallowed while computing PGBP income. However, the said expense incurred by an Indian company is allowed as deduction from gross total income. So, say for example, ABC Limited. It is profit and loss account of ABC Limited, and the profit is 5 lakh. And here, the ABC Limited has debited the advertisement expense related to political party. Then, while computing PGBP income of ABC Limited, what you have to do? Profit 5 lakh rupees, add advertisement expense to for political party 25,000. Now your income chargeable to tax under the head PGBP is 5,25,000. Now say for example ABC Limited is having income from other sources. Say for example 20,000. So gross total income is equals to 5,45,000. Now you can claim from this 5,45,000 the deduction under section 80 GGB. Yes, individual. For individual, there is a separate section that we will discuss after this. 2,25,000. Okay, so balance is taxable income. Here, so first you have to disallow the advertisement expense under section 37 if it is debited to your profit and loss account and if it is included in profit of business. Here, chalo, next is deduction in respect of contribution given by any person to political party. Here the word any person is given. So here everyone is included. So if an individual HUF partnership form will give donation to political party, then they can claim deduction under section 80 GGC. Then they can claim deduction under section 80 GGC. Okay. Here, chalo, let us discuss the conditions. Deduction and condition. The section for provide for deduction of any sum contributed in previous year by any person to political party or an electoral trust. Here also, if you want to claim deduction under section 80 GGC, then you have to give donation by way of other than cash. So if as an individual, if you give donation to political party in cash, then you are not eligible to claim deduction under section 80GGC. Okay, but if you are giving donation by way of check, then you are eligible to claim deduction under section 80GGC. So there is no restriction, there is no statutory limit that you can claim deduction of 40,000 or 50,000. Whatever amount you will provide to political party, then the full amount is eligible for deduction. Person not eligible for deduction. This deduction will, however, not be available to local authority or an artificial judicial person fully or partly funded by government. Why? Because governments are independent, right? So if government authority, that is local authority or any artificial juridical person who are funded by government, right? So they are not eligible to claim deduction. So they are not eligible to give donation to any political party. If they gave, they cannot claim deduction under section 80GGC. Meaning of political party. You have to claim this deduction from your gross total income, my dear friend. We are studying the deduction from gross total income. So first you have to calculate your gross total income. That is PGBP, house property, salary, capital gain, IFOS. So from sum of all this, you get the gross total income, right? So you can claim deduction, all the deduction from your gross total income, including this donation to political party. Political party, it means a political party registered under section 29A of Representation of People Act 1951. Chalo, clear everyone? I'll give you 2 minutes, just go through this provision, and if you are having any doubt, just let me know. Here it is disallowed because if you see, if ABC Limited has debited this expenditure in profit and loss account, then it is disallowed under PGBP. Why? Because it is not eligible deduction under the head PGBP, but it is eligible deduction from gross total income. So if it is debited to profit and loss account, then you have to add back the same and claim the deduction from gross total income. But if you are not debited this amount in your profit and loss account, then you are not required to add this amount in your profit. Any company can claim here, my dear friend. The company should register. Given by companies. So it can be any companies. Yes, Indian company can claim deduction. Clear everyone? Clear Devraj? Clear Himanshu? Everyone clear, yes or no? So next is deduction in respect of certain incomes. First is deduction in respect of employment of any new employee. Employment of any new employee under section 80JJAA. First, I'll explain you whole provision. See, 80GG में 80GG भी allow नहीं होगा when the company can give donation in cash, and the same condition is given in 80GGC also. So there is no question of disallowance. Yes, partnership firm can claim deduction. Yes, Shruti. But for company, the specific section is given, so company can claim deduction only in 80GGB. Clear? This section is applicable to those assessee whose books are required to get audited under section 44AB. So first thing, if audit is not applicable to any assessee, then that assessee cannot claim reduction under section 80JJAA. So first thing is, for claiming deduction under section 80JJAA, the audit under section 44AB is first condition. You have to require to get your books of account audited under section 44AB. My dear friend, GGC, Ayush, you can claim reduction under section 80 GGC, but the only disallowance is the donation given by any mode other than cash in both the section. So you can claim deduction in either of section. But if you are giving donation in cash, then you are not eligible to claim deduction under any section, not 80 GGC or not 80 GGP. Yes, Ankur, they can claim. Chalo, if you are all clear with earlier provision, then only we can move towards 80JJAA because it is very technical section. You all have to fully focus for this section. Chalo. So for claiming reduction under section 80JJAA, the first condition is you should get audit of your books of account under section 44AB. Okay. Any assessee whose books of account are audited under section yes, Shruti. Here, any assessee. So that means if an assessee is an individual and his books of account are audited under section 44AB, then an individual also can claim deduction under section 80JJAA. So any assessee to whom audit under section 44AB is applicable is eligible to claim deduction under section 80JJAA. 30% of cost incurred. See here what happens, this deduction is applicable for new employment. So if, say for example, if as an employer you employed new employees, you recruit employees, so you are paying salary to your employees, yes or no? Yes, new employees. Okay, I'm talking about new employees. So if you are employed new employees and you are, say for example, paying salary of rupees 5 lakh rupees, and this 5 lakh is given to eligible employee. Now what is eligible employee? That we will discuss. So this 5 lakh rupees is your business expense, yes or no? Yes. If you provide salary to your employee, is it your business expense? Yes. Okay. Then ठीक है, I will give your answer after some time because here the new section is going on. Okay, so it was from earlier provision. I will give you answer within some time. Here, so if you are employed new employee and you give salary of rupees 5 lakh rupees to those employees, okay, in aggregate, then you can claim. See, this salary is debited to your profit and loss account, and you claim deduction of this salary from your PGBP. Yes or no? Yes, but 30% of this 5 lakh. What is 30% of 5 lakh? It is 1,50,000. So 30% of this 5 lakh rupees is additionally allowed as deduction under section 80JJAA. So what happened here? You are paying salary of 5 lakh. So this 5 lakh is allowed as deduction while computing PGBP income. Right? Because this 5 lakh is debited to your profit and loss account. And after reducing this expense, you will get your net profit. But additional 30% of this 5 lakh, that comes to 1,50,000, you are eligible to claim deduction under section 80JJAA. This provision is introduced to give deduction to those employers who recruit the new employee and provide the employment opportunity to the employees. Okay, so additional 30% of the new employee's cost is eligible for deduction under section 80JJAA. And you can claim this 30% deduction for 3 years. So say for example, if I am employed new employees in previous year 21-22, then I can claim this 1,50,000 in previous year 21-22, previous year 22-23, and previous year 23-24. So you can claim deduction of this 30% for 3 consecutive years. Okay, chalo, let us discuss step by step. Where the gross total income of an assessee to whom section 44AB applies include any profit and gain derived from business, a deduction of an amount equal to 30% of additional employee cost incurred in the course of business in the previous year would be allowed for 3 assessment years, including the assessment year relevant to previous year in which such employment is provided. So here, the assessee has employed new employees. Yes, he can incur the expense for new employees is 5 lakh rupees because the salary paid to new employees is 5 lakh rupees. Right? So he can claim additional deduction of 1,50,000 while computing taxable income of previous year 21-22, that is 1,50,000. Clear? So first condition is your books of account are required to get audited under section 44AB. Second condition is you have to employ new employees. Third condition is you will get deduction of additional deduction under section 80JJAA of 30% of cost, employee cost incurred. The deduction would be allowed only subject to fulfillment of following condition. No. Yes, you can say that 30% for 3 years. So 90% additional you will get the deduction. It's fine, Pooja. The deduction is eligible for your first year's salary. So 5 lakh rupees salary you have already paid to those employees, right? So 30% of that 5 lakh is eligible for deduction for 3 years. Clear, Pooja? Clear, Akshnil? Still किसी को doubt है? Condition to be fulfilled. The deduction will be allowed only subject to fulfillment of following condition. The business should not be formed by splitting up or reconstruction or an existing business. Of an existing business. The business is not acquired by assessee by way of transfer from any other person or as a result of any business reorganization. So if you are split up your business and you recruit new employee, then you are not eligible to claim deduction. Second, in case of amalgamation, demerger, etc., if you are acquiring new business or if you are yes, any associate to whom the audit is applicable. If there is any reorganization of business, then also this section is not applicable. The report of accountant giving the prescribed particular has to be furnished before 30th September for the assessment year, being the specified date referred to in section 44AB. That is the date 1 month prior to due date for filing return of income under section 139 subsection 1. No, Rekha, the 3-year means the 30% of 5 lakh rupees. So 1,50,000 each year. 30% of additional employees cost. Now you have to report. See, for this, the report of chartered accountant is required. So you have to furnish such a report to the income tax authority before filing your return of income. And the due date for this report is 30th September of assessment year. Okay. So for claiming of this deduction, you have to obtain certificate from chartered accountant that we have incurred this kind of additional cost to our employee, our new employees are this, etc. They all are eligible employees. Okay. So chartered accountant will verify all the data and will give you the certificate. Clear, everyone? What we will discuss in section 80JJAA. Yes or no? Chalo, let me know. Just read the first condition and the second condition. After that, we will discuss the meaning of certain terms. Second condition is that if you split up your business, then you cannot claim this deduction. If you acquire other company, then this deduction is not eligible. And to claiming this deduction, you have to obtain certificate from chartered accountant, and you have to submit that certificate on your income tax portal before 30th September of assessment year. See, in your existing business, if you are employed new employee, additional employee, then you can also claim deduction. So it is not compulsory that it is only for newly set up business. Not for newly set up business. Yes, for claiming this deduction, you have your business income. If you are not having business income, then this provision is not applicable. Because if you are not having business income, then for which purpose you employed the employees? No, we have not studied that the deduction or PGBP deduction can be claimed. As a PGBP, in PGBP, you can claim as an expense or it is additional deduction. They have clearly mentioned that it is additional deduction to encourage the employment. To encourage employment. Okay. Now, what is additional employee cost? Now, what is additional employee cost? For additional employee cost, what you have to check in case of existing business. Yes, Rekha. In case of existing business, I am talking about existing business. In case of existing business, say for example, as on 31st March 2021, your total number of employees is 500. Or say for example, your total number of employee is 100. Okay. So in for previous year 21-22, what is your opening employee? Now I am giving you the definition of additional employees. Okay. Your additional employee, you can claim deduction on this section for additional employees. Now what is additional employees? So as on 1/4/2021, what is your opening employee is 100. Say for example, during the year 20 employee left the job. 20 employee left the job. And you recruit employed new employees. Say for example 30. So I am explaining condition 3 right now. What is condition 3? What conditions is this? See, for claiming this deduction, you have to give data that we have employed this kind of additional employees. The salary is this, that supporting that we have already paid the salary to chartered accountant, and chartered accountant will certify that the company has incurred such expenditure. And you have to submit the report of chartered accountant to income tax authority. So now, so your opening employee is 100. During the year, 20 employees left the job and you recruited new 30 employees. So what is your closing employee on 31st March 2022? It is 110. It is 110. So additional employee means difference between closing number of employee and opening number of employee. So what is additional employee? Additional employee means closing number of employee and opening. So what is my closing number of employee? 110. And what is my opening? It is 100. So what is additional employees? 10 employees. So what is additional employees? 10 employees. Clear everyone? What is additional employee? How to calculate additional employee? Clear for existing business. For new business, for newly set up business, Shruti, for every section, it is not applicable. You have to check section wise. Whenever it is given resident, then resident only can claim. Whenever there is nothing is specified, then everyone can claim. Mohammed, it is 10. So net increase in employee. Net increase in employee says that additional employee cost. So what is my net increase? How you calculate net increase? So closing number of employee minus opening. That is net increase in employees. Right? Why? Because here the 20 employee left. So I will not pay salary of to this 20 employees. Right? That's why here it is for additional employees. Now additional employees is difference between closing number of employee and opening number of employee. And in case of newly set up business, if it is your first year of business, then every employee you recruit is the new employee. Simple, right? The emolument paid or payable to additional employee employed during the previous year. In case of an existing business, the additional employee cost shall be nil. The additional employee cost shall be nil if there is no, you will, because your 20 employee has already left, so you will save the cost of that 20 employees, right? So you have to check net increase, that's it. What you have to remember, you have to check net increase in employees. Chalo. You cannot claim deduction if there is the additional cost shall be nil. If there is no additional cost, then you cannot claim deduction. There is no increase in number of employees from the total number of employees employed as on last day of the preceding year. So there is no increase. If there is no increase, say for example 20 left, 20 joined. So there is no increase. So there is no increase, right? Because at the opening I have 100 employees, at the closing of the year I have 100 employees. So there is no addition to my employees. Okay, then you cannot claim deduction. Emoluments are paid otherwise than by account paid check or by account paid draft or by use of electronic clearing system through a bank account or through any other prescribed electronic mode. Say for example, if you are paying salary in cash, then you cannot claim deduction. So for claiming deduction, you are not required to claim, you are not required to pay salary. Say for example, if you are paying salary in cash, that means by any mode other than prescribed mode, then you are not eligible to claim deduction. This all are for to restrict the cash transaction. In the first year of new business, the emolument paid or payable to employee employed during that previous year shall be deemed to be additional employee cost. Because in case of first year, every employee join your business is a new employee. Now, what is additional employees? Here I have already written that you can claim deduction of eligible employee. You can claim deduction of eligible employee only. So what is eligible employees? So an employee who has been employed during the previous year and whose employment has the effect of increasing the total number of employed by the employer as on last day of the preceding year. So if those employees due to whom there is net increase in number of employees. Exclusion. Now, from this 10 employees, in our case, there is opening is 100 minus 20 left and 30 join. So closing is 110. Right? So there is increase of 10 employees. So from this 10 employees, you can claim deduction of only a cost incurred to those employees who are not falling in these conditions. So an employee whose total emolument are more than 25,000 per month. So if you are recruiting new employee and that employee's salary is more than 25,000, then you cannot claim deduction of that employee. Okay. So from your net increase, you have to say, for example, from this 10 employees, there is 2 employees. There is there are two employees whose salary are 30,000. So you cannot claim deduction of this 30,000. In new business, in first year of business, whatever you recruit, all are new employee because there is opening is zero. Opening is zero. An employee for whom the entire contribution is paid by government under the employee pension scheme notified in accordance with the provision of employee provident fund or miscellaneous provision in 1952. So if government is providing a whole pension contribution, then those employees are not covered. An employee who does not participate in recognized provident fund. So say for example, in this the 10 employee, one employee is not contributed to provident fund, then we have to ignore this one employee. An employee employed for a period of less than 240 days during the previous year. Say for example, one employee is working for, say for example, 200 days. Then this should not included in our net increase. So the 4 employees are not covered. So the remaining 6 employees. So we can claim reduction of this 6 employees. We will discuss the illustration, so you will get the better idea. The illustration is for new employment only. So from net increase, you have to ignore those employees whose salary are more than 25,000, whose pension contribution are given 100% by government, or who do not participate in recognized provident fund, or whose period of working with the company is less than 240 days. In case of an assessee engaged in business of manufacture or apparel or footwear or leather product, an employee employed for a period of less than 150 during the previous year. So here the instead of if you are engaged in the business of manufacture of apparel or footwear or leather product, then instead of 240 it is 150 days is applicable. If an employee is employed during the previous year for less than 240 days or 150 days, as the case may be, but is employed for a period of 240 days or 150 days, as the case may be, in the immediately succeeding year, he shall be deemed to have been employed in the succeeding year. Say, for example, in previous year 21-22, there are 4 employees whose employment is less than 240 days. Say, for example, they joined the company on 1st December 2021. So for previous year 21-22, their working days with the company is less than 240, yes or no? Yes. But in previous year 22-23, they work with the company for full year. They work with the company for full year. Then in that case, then what happened, my dear friend? Then in that case, this 4 employees are deemed to be employed in previous year 22-23, and whatever salary paid to this 4 employees, you can claim reduction of that salary in previous year 22-23. Even you are not eligible to claim deduction of this 4 employee in previous year 21-22. Why? Because they are working with the company is less than 240 days. So you can claim reduction of this additional 4 employee in previous year 22-23 if they work with the company in previous year 22-23 for more than 240 days. Accordingly, employer would be entitled to deduction of 30% of additional employee cost of such employee for 3 years from the succeeding years. Emolument. Any sum paid or payable to an employee in lieu of his employer by whatever name for, that is salary. Exclusion from the definition. What is excluded from the salary? So any contribution paid or payable by the employer to any pension fund or provident fund or any other fund for the benefit of employee under any law for the time being in force. And any lump sum payment paid or payable to an employee at the time of termination of his service or superannuation or voluntary retirement, such as gratuity, severance pay, leave encashment, voluntary retrenchment, benefit, commutation pension, etc. So these are not included in the salary. Okay, so employer's contribution to provident fund should be excluded. Any retirement benefit should be excluded. Chalo, we will discuss 240 in all the cases and 150 in case if you are engaged in the business of manufacture of apparel or footwear or leather product. So if you are manufacturer of footwear, then instead of 240, the condition of 150 days is applicable. Here, Pooja. Mr. A has commenced the business. Here it is new business. Manufacture of computers. So here the 150 days is not applicable. Here the 240 days is applicable, right? Because 150 days is applicable only in case if you are engaged in the business of manufacturing of apparel, footwear or leather product. He employed 350 new employees. See, here there is new business. The opening is 0. Why? Because it is new business. New employee employed is 350. The details of whom are as following. This is the breakup of new employees. Right? So net increase, what is your closing? Your closing employee is 350. So what is net increase? 350 closing minus opening. So 350. So there is increase of 350 employees, right? So you can claim reduction of this 350 employees, whatever salary is paid, but provided this 350 are eligible employees. So for eligible employee, from this 350, you have to exclude those employees whose salary are more than 25, those employees who are not contributed to Provident Fund, and those employees who is working with the company is less than 240. So first, chalo. From 350-75 employees employed on 1st April 2021, and they are casual employee and their salary is 24,000. So all the conditions are fulfilled here. The employees work with the company for more than 240 days, yes or no? Yes. The salary is less than 24,000, yes or no? Yes. For Provident Fund, here the note is given, we will discuss that. But till the time, 75 is eligible employee. 125 casual regular employee, date of employment 1/5/2021, and the salary is 26,000. So this 125 employees cost is not eligible. Why? Because their salary is more than 25,000. Why? Because their salary is more than 25,000. They have worked with the company for more than 240 days, but their salary is more than 25,000. So for this 125 additional employee, we cannot claim deduction. 50 casual employee employed on 1/8/2021 and salary is 24,500. See here in para given that the regular employee participate in recognized provident fund while casual employee do not. So this casual employee is not eligible for deduction. Why? Because they work with the company for more than 240 days. Their salary is less than 25,000, but they are not contributed to provident fund. But they are not contributed. They are not participate in provident fund. So this 50 is not eligible. Yes or no? And 100 employed on 1st September 2021. Now 1st September 2021 to 31st March 2022 कितने दिन होते हैं? How many days? September, October, November, December, January, February, and March. Almost 212 days. Okay. So this employee is not eligible because why? Because they are regular, they contributed in provident fund, their salary is less than 25,000, but they work with the company for less than 240 days. But if suppose this 100 employees, this 100 employees is working with the company in next year, that is in previous year 22-23 for greater than 240 days. For more than 240 days, then you can claim deduction of this 100 employee in subsequent year. Right? Sure. So for our purpose, the eligible employee are only 75 employees. Increase is 350, but additional employee is 75 eligible, right? Compute the deduction, if any, available to Mr. A for FY 22-23 if the profit and gain derived from manufacture of computer that year is 75 lakh and his turnover is 10.16 crore. Turnover is more than 1 crore. So the books of account are required to audit it, right? So audit is applicable. So Mr. A is eligible to claim deduction under section 80JJAA. Now, chalo. What is the amount of deduction? So 75 employee. 12 months into 24,000 salary per month. So total additional employee cost is 2 crore 16 lakh. Right? During the year, he incurred additional employee cost of 2 crore 16 lakh. So 30% of this 2 crore 16 lakh, that is 64 lakh 80,000, he can claim deduction under section 80JJAA. Whatever additional cost you incurred, you can claim 30% of that additional cost for 3 years. So 64.8 in previous year 21-22, previous year 22-23, and previous year 23-24. Okay, here the working note is given how the 75 will come. What would be your answer if Mr. A has commenced the business of manufacture of footwear? If the business is of, see, this is not covered. Why? Because its salary is more than 25,000. This is also not covered. Why? Because they are not participating in provident fund. But this may be covered if you are engaged in manufacture of footwear. Why? Because here the working with the company is 212 days. But if you are engaged in the manufacture of business, the new employee should work with the company for greater than 150 days. So here the employees are work with. Here the employees are work with the company for more than 150 days, so they are eligible employee. If Mr. A is engaged in the business of footwear, manufacture of footwear, right? Then in that case, what happened, my dear friend? Then in that case, the 2,16,000 was there, right? But the additional is 24,000 per month plus 7 employees plus 7 months and 100 employees. Well, how 7 months? September, October, November, December, January, February, and March. 7 months salary we have paid to this employees. Yes, Akshnil. So in that case, 2 crore 16,000 plus 24,000 plus 7 months plus 100 employees. So total is 3 crore 84 lakhs. So 30% of 3 crore 84 lakh comes to 1 crore 15 lakh 20,000 is eligible for deduction. Clear, everyone? I'll give you 5 minutes. Just go through whole the provision and the illustration, and if you are having any doubt, just let me know immediately. Okay, after you will get the provision of 80JJAA, we will move towards section 80QQB. Go through, everyone. If you are having any doubt, just let me know. I'll give you 5 minutes. See, in case of manufacturer of footwear, only one condition is changed. Everything remains same. Only one condition is changed. For working with the company, you can take those employees who work with the company for more than 150 days. And the other thing is, everyone, we have discussed in our first session that you cannot claim deduction more than your gross total income. You cannot claim deduction more than your gross total income. Yeah, footwear, leather product and apparels. Jyoti, footwear, leather product and apparels. Mohammed, if you are having income of only 75 lakh and your eligible deduction is 1 crore 15 lakh 20,000, then you can claim deduction only up to 75 lakh to the extent your gross total income. There should be no deduction of that employee, Sumesh. So we have taken in our first case only 75 employees for the purpose of deduction. For category 4, we are not eligible to claim deduction in case of 1. Rekha, the deduction that they have provided is standard deduction. So from your gross total income, even if you deposited less amount, you can claim straight deduction of 75,000. And if you are depositing more amount, then also you can get deduction of 75,000, but to the extent of your gross total income. There is no limit of maximum employee employed. The condition is there should be net increase and the increased number of employees are eligible employees. That's it. See, if you are claiming reduction of those employees in first year, in succeeding year, they are considered as old employees. But if you are not claiming deduction because of they are not working with the company, they are working with the company for less than 240 days in current year, and in next year if they are working with the company for more than 240 days, then it is deemed that those employees are employed in next year and you can claim deduction of that those employees in succeeding year. Clear? Rekha, clear your doubt? Sumesh, clear? See, if the employee is worked with the company for in next year for 240 days or more, then they are deemed that the employees are employed in succeeding year only. Okay, so you can claim reduction for that, their cost for 3 years from succeeding year. That is from 20 to 23, 23, 24, and 24, 25. Take a clear your doubt. That is for from that ATD, ATDD. Yes or no, Shruti, Somesh, Somesh is clear. Bharti, Bharat clear. Rekha clear. Yeah, because there is given that if you have for claiming deduction in illustration 12, the requirement is you have to take loan from bank or public sector bank, not from NBFC. In illustration 12, they have taken loan from NBFC. That's why it is not eligible. Chalo, next is reduction in respect of royalty income of author of certain books other than textbook. Say for example, Chetan Bhagat, Robinson, they are author of books, right? So their books are published by publication house and sold in open market. Other than textbook, right? Because other textbooks are covered some syllabus and it is common. So other than textbook, if you write any book and the publisher will publish your book, then you will get the royalty income. Then you will get the royalty income. Okay. So you will get deduction from your royalty income. Now let us discuss the eligible assessee and quantum of deduction. Under section QQB, deduction of up to maximum of 3 lakh is allowed to an individual resident in India. Here the deduction is available to an individual resident only. Individual resident only. And the maximum limit for deduction is 3 lakh rupees. So first is it is available to only individual resident. And second, the maximum deduction is 3 lakh rupees. In respect of income derived as author or joint author, that is the deduction shall be the income derived as author or joint author or 3 lakh, whichever is less. So if you are receiving royalty income of 1,50,000, then your income is 1,50,000 or statutory limit is 3 lakh. Whichever is lower is allowed as deduction under section QQB. Okay, so here you are eligible to claim deduction of 1,50,000. Now say for example your royalty income is 5,50,000 and the statutory limit is 3 lakh. So whichever is lower. So you will get deduction from your royalty income 3 lakh rupees straight away. Eligible assessee. This income may be derived either by way of lump sum consideration for the assignment or grant of any of his interest in copyright of any book. Such book should be a work of literacy, artistic or scientific nature or of royalty or copyright fee, whether receivable in lump sum or otherwise. See, there are two ways. If you are writing any book and the publisher will publish your book, then all the copyrights are transferred to that publisher and you will get the royalty for that right. Okay. So what happened? You will get either lump sum consideration that they says that for your this book, we will give you 50 lakh rupees lump sum. Or what happened, or otherwise they can give you the consideration, the royalty based on sale of books. Say for example, your 100 books are sold, then the sale price is for 100 books, the sale price is 1,000 per book. So 100 books into 1,000 rupees. So it comes to 1 lakh. So if they says that we will give you royalty of 10% of your books sold. So here the 10% is 10,000 they will give you. So there are two ways, either lump sum or on the basis of sale of books. You will get royalty. This deduction shall not, however, be available in respect of royalty income from textbook for school, guide, commentaries, brochure, diary, magazine, newspaper, journal, pamphlet, tract, and other publication of similar nature. As a journalist, if you are writing any article in newspaper, then you will not get the royalty and you are not eligible for deduction under section 18. It should be for books. This deduction shall not. Okay. Where an assessee claimed deduction under this section, no deduction in respect of same income may be claimed under any other provision of Income Tax Act 1961. Manner of computation of deduction. For the purpose of calculating the deduction under this section, the amount of eligible income, royalty or copyright fee received otherwise than by way of lump sum. If it is lump sum, then you have to check the lump sum consideration receipt or 3 lakh, whichever is lower. But otherwise, then lump sum. Then what happened? Say for example, otherwise the lump sum means based on sale of books. Then before allowing expense attributable to such income, expense attributable to such income shall not exceed 15% of value of books sold during the previous year. So here, say for example, for this we will discuss the example illustration number 17 here. So what they say is that if you are receiving consideration based on sale of your books, then in that case, your deduction is restricted to 15% of value of books sold. So say for example, the value of books sold is 10 lakh rupees. So 15% of this is 1,50,000 rupees. So quantum of deduction shall not exceed this 1,50,000. However, this condition is not applicable where the royalty or copyright fee is received in lump sum in lieu of all the right of author in the books. If lump sum is received, then the limit is 3 lakh. Condition. Furnishing of certificate and prescribed form. For claiming deduction, the assessee shall have to furnish a certificate in the prescribed manner in prescribed form, duly verified by the person responsible for making such payment, setting forth such particular as may be prescribed. The publisher will give you the certificate and you have to approve the same that you have given all the rights of that book to that publisher. No one can copy the same. Period for repatriation of income on outside India. If you are earning any royalty income from outside India and in foreign country, right? If say for example, if you are receiving your royalty income in America, then to claim deduction, you have to repatriate, you have to remit such income in India within 6 months from the end of previous year in which such income is earned. So say for example, if you are earning income in America in previous year 21-22, say for example, so you have to repatriate such income in India if you want to claim deduction under KTQQB within 6 months. That is 6 months from the end of previous year. So up to 30th September 2022. You have to bring such income in India to claim deduction under this section. Where the assessee on any income from any source outside India, he should bring such income into India in convertible foreign exchange within a period of 6 months from the end of previous year in which such income is on or within such further period as the competent authority may allow in this behalf for the purpose of claiming deduction under this section. The competent authority will allow more period also. The competent authority is Reserve Bank of India or such other authority as is authorized under any law for the timing in force for regulating payment and dealing in foreign exchange. Illustration number 17. Mr. Akash received royalty of 2,88,000 from a foreign country for a book authored by him, being a work of literacy nature. The rate of royalty is 18% of value of book. So here what is the royalty amount is 2,88,000, right? It is 18% of books sold. So the expenditure incurred by him for earning this royalty is 40,000. The expense related to this income is 40,000. The amount remitted to India till 30th September 2021 is 2,30,000. The remaining amount was not remitted till 31st March 2022. Compute the amount includable in gross total income of Mr. Akash and the amount of deduction which he is eligible under section 82QQB. Now, what is his net royalty income? What is his net royalty income? So, 2,88,000 royalty received and 40,000 expense. So, what is his net income? His net income is 2,48,000. So, 2,48,000 is royalty income included in his gross total income. In gross total income, 2,48,000 is included as royalty income. Right? Now deduction, we can claim deduction under QQB, yes or no? Yes. But how much so we have discussed that if the royalty is based on sale of books, then the deduction is restricted to 15% of consideration of sale of books. So here what happened, for here the royalty is received at the rate of 18%. So for 18%, the royalty received is 2,88,000. For 18% of sale consideration, the royalty is 2,88,000. Then for 15%, what is the royalty amount? So the royalty amount comes to 2,40,000. Okay, so he can claim reduction of 2,40,000 in 80 QQB, but up to 30th September, he remitted the amount in India only up to 2,30,000. Only up to 2,30,000, right? And remaining amount till 31st March 2022, he is not repatriated in India. He is not repatriated in India, right? So what happened here? The amount remitted in India is 2,30,000 and expense already claimed for the income from the income, because we have added in our gross total income as royalty income 2,48,000 after 40,000 of expense. So you cannot claim expense again. So from eligible deduction of 2,30,000, you have to reduce 40,000 expense as you have already taken while computing the income of royalty, and the eligible deduction is 1,90,000. Everyone just go through the illustration and the provision, and if you are having any doubt, just let me know. After that, we will discuss ATRRB. Everyone just go through the provision, and if you are having any doubt, just let me know. Yes, Pooja. If whole amount remitted in here, then in that case, maximum 2,40,000 is eligible for deduction. So 2,40,000 is eligible deduction minus expense that you have already taken while computing royalty income 40,000. So you can keep deduction up to 2,00,000. Because maximum permissible is 2,40,000, that is to the extent of 15% of consideration. If 15% is 2,50,000, then also you can claim reduction of 190. Why not? To the extent of 15%, it is eligible. Yes, Somesh. Tika, here though, if the 15% is 2,50,000, then the maximum eligible deduction is 2,50,000. So whatever amount you remitted in India minus expense, so the deduction come here, and this or this, whichever is lower, is eligible deduction. Clear? Next is deduction in respect of royalty on patent, ATRRB. Eligible assessee. A resident individual who is registered as the true and first inventor in respect of an invention under the Patent Act 1970. Yes. Then 2,48,000. So here the eligible amount for deduction is 2,40,000 only. So that in that case also, here it is 248 minus 40,000. So it comes to 2,04,000. So 2,04,000 is less than this 2,40,000. He can claim deduction of 2,04,000. Clear, Rekha? So if you are inventor of anything and you took patent on that, then you can claim deduction on your patent income under section 80 RRB. Quantum of deduction income by way of royalty of patent registered on or after 1/4/2003 subject to maximum of 3 lakh. So if you are giving your patent to anyone and you will receive the amount, then in that case, what is the quantum of deduction? The actual amount received as a royalty of patent, actual amount received for 3 lakh, whichever is lower. No deduction in respect of such income will be allowed under any other provision of the Act. Eligible income. This exemption shall be restricted to the royalty income, including consideration for transfer of right in patent or for providing information for working or use of patent or rendering of any service in connection with this activity. So you can give, say for example, you are inventing any formula, then you can give right to use this formula to any company, okay, or use any your invention. The exemption shall not be available on any consideration for sale of product manufactured with the use of patented process or patented article for commercial use. Here the exemption is not available when you receive the consideration for sale of product manufactured with the use of your formula. Okay, here you will get deduction only from the income, which you will receive for the use of your patent. In respect of any such income which is earned from source outside India, the condition is same. If you want to claim deduction, then you have to bring such income in India within 6 months from the end of previous year. Otherwise, you are not eligible to claim deduction. Here it is same, but it is for patent. So next is deduction in respect of other income. Deduction in respect of interest on deposit in saving account. So if you are having any amount in your saving account, then you will get quarterly interest on your saving account amount. Okay. So in that case, you will get the deduction of that saving interest. First, the saving interest is your income from other sources. Saving interest is your income from other sources, right? So it is already included in your gross total income. Yes or no? Yes or no? Yes. Now you can claim reduction of that saving interest to the extent of 10,000. So say for example, as an individual, I am having saving interest of rupees 8,000. So this 8,000 is already included in my gross total income as IFOS. Yes or no? Yes. Now from my gross total income, I can claim reduction of this 8,000 under section 80 TTA. Why? Because the limit under section 80 TTA is actual saving interest for 10,000, whichever is lower. So here I can claim reduction of 8,000. But say for example, my saving interest is 18,000. It is already included in my gross total income as income from other sources. Now what happened in 80 TTA, actual saving interest 18,000 or statutory limit 10,000, whichever is lower. So under 80 TTA, I can claim reduction of 10,000 rupees. Clear everyone? Section 80 TTA provides that in case the gross total income of an assessee being an individual or Hindu undivided family, it is only available to individual and HUF. This deduction is only available to, yes Bharat, it depends on what is your nature. If you are author and you want to claim this as business income, then you can claim it as business income. It just depends on you. So 80 TTA deduction is eligible only to individual and HUF. Include any income by way of interest on deposit in saving account, not being time deposit. So this deduction is not available on interest received on fixed deposit. Which are deposit repayable on expiry of fixed period. Deduction up to 10,000 in aggregate shall be allowed. See for example, I am having 4 bank account and I received 10,000 from each bank account and my total saving interest is 40,000. So this 10,000 limit is aggregate saving account. Okay. So my total saving interest is 40,000 or the limit under section 80 TTA is 10,000, whichever is lower. So 10,000, I'll get deduction under section 80 TTA. Aggregate shall be allowed while computing total income of such assessee. Such deduction shall be allowed in case the saving account is maintained with banking company to which Banking Regulation Act 1949 apply, cooperative society engaged in carrying on business of banking or post office. So if you are having a interest from post office, then also you will get the deduction. Deduction under this section would, however, not be available to senior citizen. Why? Because for seniors, if you are a senior citizen, then you are not eligible to claim deduction under section 80 TTA. Why? Because for senior citizen, there is a separate section that is 80 TTB. There is a separate section that is section 80 TTB. If the aforesaid income is derived from any deposit in a saving account held by or on behalf of firm, AOP, POI, no deduction shall be allowed in respect of such income in computing total income of any partner of the firm or any member of AOP or any individual of BOI. Say for example, partnership firm is having saving account, then the partnership firm is not eligible to claim deduction under section 80 But as a partner, you cannot say that I will claim the deduction under section 80 TTA on saving interest received by partnership firm. Okay. In effect, the deduction shall under this section shall be allowed only in respect of income derived in form of interest on saving deposit other than time deposit, that is fixed deposit, made by individual or HUF directly. Made by individual or HUF directly. Clear everyone? Section 80 TTA. 80 TTA is applicable to individual and HUF. Right, the statutory limit is 10,000 rupees. The statutory limit is 10,000 rupees. Clear? Just go through the provision. And 80 TTA is not applicable to senior citizen because for senior citizen there is a different section, that is section 80 TTB, that we will discuss. Everyone clear with section 80 TTA? Yes, Bharat. Next is section 80 TTB. Deduction in respect of interest on deposit in case of senior citizen. So 80 TTB is applicable only to senior citizen. So 80 TTB is not applicable to an individual other than senior citizen. Why? Because for that individual 80 TTA is there. Eligible assessee. A senior citizen, a resident individual. The senior citizen should be resident individual who is of the age of 60 years or more at any time during the relevant previous year, whose gross total income includes income by way of interest on deposit, both fixed deposit and saving account. No, Rekha. See, here in 80 TTA, only saving interest is covered. But in case of senior citizen under section 80 TTB, saving interest as well as FD interest, both are covered, right? With banking company to which Banking Regulation Act 1949 apply, or a cooperative society engaged in carrying on business of banking, including cooperative land mortgage bank or cooperative land development bank or post office. The quantum of deduction here is actual amount of interest on deposit or 50,000, whichever is lower. So say for example, Mr. X, aged 70 years, earning saving interest 15,000 and FD interest 40,000. So in his income from other sources, total interest income is 55,000. Okay, this 55,000 is already included in gross total income under the head income from other source, right? So from gross total income, Mr. X can claim deduction under section 80TTB. Yes, but 80TTB is 55,000, that is actual interest, or 50,000, that is statutory limit given in section, whichever is lower. So lower is 50,000. Okay. So Mr. X can claim reduction of this 50,000 from his gross total income. So under section 80TTB, as a senior citizen, you can claim reduction of interest on saving deposit and fixed deposit both. Non-availability of deduction to partner member where deposit held by firm AOP BOI. Where interest income is derived from any deposit held by or on behalf of firm, an AOP or BOI, the partner of firm or member of AOP or BOI would not be allowed deduction in respect of such income while computing their total income. Same that we have already discussed under section 80 TTA. So if the deposit is in the name of a partnership firm or AOP, then the partner of AOP, yeah, or partner of firm cannot claim deduction under section 80 TTB on such deposits. Is that clear, everyone? Yes or no? They will take break of 10 minutes, and after that we will discuss illustration number 18. Okay. We'll have break of 10 minutes. So let us discuss illustration number 18. Mr. A, resident individual, aged 61 years. Mr. A is a resident individual aged 61 years, so he is resident senior citizen. Has earned business income computed 1,35,000. So his income from PGBP is 1,35,000. Lottery income gross during the previous year 21-22 is 1,20,000. So income from other source, lottery income 1,20,000. He also has interest on fixed deposit of 30,000 with bank. So interest on fixed deposit is 30,000. He invested an amount of 1,50,000 in public provident fund account. So investment in PPF is eligible for deduction under section 80C. What is the total income of Mr. A for AY 22-23, assuming that he does not opt for section 115 BAC? So now what is his gross total income? It is 2,85,000, right? Now from this 2,85,000, as per the provision of income from other sources, you cannot claim deduction under chapter 6A from casual income. You cannot claim deduction under chapter 6A from casual income. So for claiming deduction under chapter 6A, that is under section 80C, investment in public provident fund, and as a senior citizen, he earned interest on fixed deposits. So is he eligible to claim deduction under section 80 TTB? Yes or no? Yes. Right. So for claiming deduction under section 80C and 80 TTB, we have to exclude the lottery income of 1,20,000. Why? Because you cannot claim deduction under chapter 6A from casual income. So here under 80C, the statutory limit is 1,50,000 and the deposit in public provident fund account is also 1,50,000. So full 1,50,000 is eligible for deduction. Under section 80 TTB, interest earned by senior citizen on saving account or fixed deposit. So here the interest on fixed deposit is 30,000. So 30,000 or 50,000. 30,000 actual interest or 50,000 is a limit given under section 80 TTB. Whichever is lower is allowed as deduction. So 30,000. So under 80 TTB, the deduction is 30,000. So total deduction, total eligible deduction is 1,80,000, right? Eligible deduction is 1,80,000, but eligible gross total income is minus 120, that is 1,65,000, right? Eligible gross total income is 2,85,000 minus 1,20,000. That is taxable as casual income, right? That is taxable as casual income. So here, my dear friend, the deduction is restricted to 1,65,000 only. Why? Because the eligible deduction is 1,80,000, but eligible gross total income is only 1,65,000. So I can claim deduction only to the extent of eligible gross total income. Yes or no? Yes. So the eligible deduction is restricted to 1,65,000, and the remaining 1,20,000, that is lottery income, is taxable as casual income at the rate of 30%. At the rate of 30%. Right? Clear, everyone? Yes or no? Yes, Rajinder, do you have any doubt? Somesh, it is given because you are having, if you are having business income, then only you can claim reduction under section 80GGG. Otherwise, you are not eligible to claim reduction under section 80GGG. That's why it is given. Rajinder, clear your doubt? So, Rajinder, what is your doubt? So, everyone clear with illustration number 18? So, let us discuss illustration number 19. Mr. Gautam, aged 42 years. Has a salary income computed 5,50,000. Computed means it is after standard deduction and everything, it is taxable salary income. For previous year ended 31st March 2022. He has earned interest of 14,500 on saving bank account with SBI during the year. Chalo. This saving bank account is taxable as income from other sources, yes or no? Yes. But Mr. Gautam is non-senior citizen, so no, Rajinder. You cannot carry forward the excess deduction if you are not having sufficient gross total income. Lottery income is a casual income and it is given under section 56 that on casual income, no deduction under chapter 6A is eligible. So here, Gautam is of the 42 years, yes or no? Yes, he is non-senior citizen. So he can claim deduction under section 80 TTA of this 14,500 saving interest, yes or no? Yes. But under section 80 TTA, the deduction available is actual interest, that is 14,500 or 10,000 limit, whichever is lower. So 10,000 is given. Right? So 10,000 is available under section 80 TTE. Compute total income of Mr. Gautam for assessment year 22-23 from the following particulars, assuming that he does not opt for section 115 BAC. Life insurance policy, life insurance premium paid to Birla Sun Life Insurance in cash amounting to 25,000 for life insurance of his dependent parents. The insurance policy was taken on 1/5/2019 and the sum assured on life of his dependent parents is 2 lakh rupees. My dear friend, in ATC we have discussed that an individual can claim reduction under section 80C on account of life insurance premium if he has paid the insurance premium for self, spouse and child. Right? So the parents are not covered. Therefore, Mr. Gautam is not eligible to claim reduction of this life insurance premium paid for his dependent father or dependent parents. Clear everyone, yes or no? Life insurance premium of 25,500 paid for insurance of life of his major son who is not dependent on him. See, the major son not dependent on him at the condition of this dependent child is given in section 80D, not in 80C. The sum assured on life of his son is 3,50,000. The life insurance policy was taken on 30/3/2012. So policy is taken on or before 1st April 2012, yes or no? So what you have, is he eligible for is he eligible to claim reduction of life insurance premium paid for his son? Yes, but to the extent of 20% of sum assured. So here, my dear friend, the policy taken before 1/4/2012. So we need to check the 20% of sum assured. What is 20% of 3,50,000? 70,000. Right? Or actual premium paid is 25,500. So he is eligible to claim reduction of full premium under section 80C. 25,500. Life insurance premium paid by check of rupees 22,500 for his life. The insurance policy was taken on 8 September 2018 and the sum assured is 2 lakh. So policy taken after 1/4/2013, yes or no? Yes. So what we have to check? We can claim reduction under section 80C for life insurance premium. Actual premium paid, that is 22,500, or statutory limit is 10% of sum assured, that is 20,000, whichever is lower. So 20,000, here we can claim reduction under section 80C up to rupees 20,000. Clear? Everyone clear till 3 points? Premium of 26,000 paid by check for health insurance of self and wife. Self and wife. Now, health insurance premium is covered under section 80D. Yes or no? Yes. Mr. Gautam is non-senior citizen. So, in that case, 80D statutory limit is 25,000. Here, he has paid 26,000 as health insurance premium, but he is eligible only to the extent of 25,000. Right? 1,500 paid in cash for his health checkup. Now the preventive health checkup is also covered that under the statutory limit of 25,000. But we have already paid the health insurance premium more than 25. So 80D 25,000 reduction is fixed, right? So that this 15,000 preventive health checkup is not eligible. Now 4,500 paid in check for preventive health checkup for his parents who are senior citizens. In case of parents, if you are paying medical insurance premium and preventive health checkup, and if they are senior citizen, then you are eligible to claim deduction to the extent of 50,000 under section 80D. Right? So here the 4,500 in check paid for preventive health checkup of his parents is eligible. Why? Because the statutory limit is 50,000 and he has paid only 4,500 for preventive health check. Paid interest of 6,500 on loan taken from bank for MBA course pursued by his daughter. Section 80E. Remember, if you are taking any loan for yourself, for your children and spouse for higher studies, then the interest paid on such loan is eligible for deduction under section 80E. A sum of 5,000 donated in cash to an institution approved for the purpose of section 80G for promoting family planning. For family planning, the 100% donation is eligible for deduction under section 80G. But for that, we have to calculate the eligible income, the adjusted income. Okay, that we will discuss. So first thing, what is the total income of Mr. Gautam? Gross total income is 5,50,000 salary plus 14,500 income from other sources, that is saving interest. So it is 5,64,500. Now, let us discuss the deduction under section 80C. The first point is not available. In second point, 25,500 is available. In third point, 20,000 is available. Yes or no? Yes. So 80C is 45,500. It is less than 1,50,000. Full amount is eligible for deduction. Under section 80D, 25,000 as per point number 4, 25,000 is available, and in point number 5, 4,500 is available for parents. Right? So under 80D, 29,500 is available. 6,500 is eligible for deduction of interest on loan taken for MBA course of his daughter. Right? And 80 TTA. Saving interest. Yes or no? Here we discuss that. 14,500 or 10,000, whichever is lower, is eligible for deduction. So 10,000 is eligible. So total deduction is 91,500 and his total income after deduction is 4,73,000. Is that clear, everyone? Just go through the sum, and if you are having any doubt, just let me know. After that, sorry, the donation is pending. Here the donation given is 5,000 rupees. Here the donation given is 5,000 rupees, but the donation is given in cash. Donation is given in cash. We have studied that if you are giving donation in cash, if you are giving donation in cash, then you are not eligible. If you are giving donation of more than 2,000 in cash, then you are not eligible to claim deduction under section 80G. Here the deduction is given, here the donation is given in cash of rupees 5,000. So this is not eligible. Why? Because you are giving donation in cash in excess of 2,000 rupees. No deduction shall be allowed under section 80G in case the donation is made in cash of a sum exceeding 2,000. If, say for example here, instead of 5,000, if Mr. Gautam has donated 1,500 rupees, then he can claim deduction of donation under section 80G. Why? Because the donation in cash is not in excess of 2,000 rupees. Therefore, the deduction under 80G is not allowable in respect of cash donation of 5,000 made to an institution approved for the purpose of section 80G for promotion of family planning. Here, just go through the illustration number 19. If you are having any doubt, just let me know. After that, we will discuss deduction under section 80U. Clear everyone? Yes or no? Yes or no? Ayush clear? Akshnil? Chalo. Next is deduction in case of person with disability. Person with disability. Section 80U harmonized the criteria for defining disability as existing under income tax rule with the criteria prescribed under Person with Disability Act 1995. Eligible assessee. See, we have discussed this same deduction, right? But here, section 80DD, right? We have discussed section 80DD for maintenance, including medical treatment of dependent disabled. But here the deduction is eligible. But here, section 80DD deduction is available to those individual and HUF who are maintaining the dependent disabled. But section 80U is eligible to those individuals who are suffering from disability. In section 80DD, we have studied one line that if you are claiming deduction under section 80U, then deduction under section 80DD is not available. Right? So section 80U is available to those individuals who are suffering from disabilities. So this section this section is applicable to resident individual who at the time of during the previous year is certified by medical authority to be person with disability. Say for example, Mr. X is having disability. Say for example, Mr. X is paralyzed, right? So in that case, in under section 80U, Mr. X can claim deduction. Okay, under section 80DD, the person who maintaining Mr. X is eligible to claim deduction. So if you are claiming deduction, the disabled person claim deduction under section 80U, then the person who maintain the disabled person is not eligible to claim reduction under section 80DD. Okay. The benefit of deduction under this section is also available to persons suffering from autism, cerebral palsy, or multiple disease. The quantum of deduction is same. If a deduction of 75,000 in respect of person with disability and 1,25,000 in respect of person with severe disability, that is having disability over 80% is allowable under this section. Under section 80DD also, the same deduction is available, right? The quantum of deduction is same in section 80DD as well as 80U, irrespective of your actual amount contributed or deposited. Condition. The assessee claiming deduction under this section shall furnish a copy of certificate issued by medical authority in the form and manner as may be prescribed, along with return of income under section 139 in respect of assessment year for which the deduction is claimed. Where the condition of disability require reassessment. Whenever you are filing your return of income, you have to submit the certificate that you are disabled and you are claiming deduction under section 82. And whenever the fresh assessment is required, then you have to obtain new certificate from medical authority. By the condition of disability require reassessment, a fresh certificate from the medical authority shall have to be obtained after the expiry of period mentioned on the original certificate in order to continue to claim the deduction. Clear? So here your deduction chapter is over. Here your deduction chapter is over. Let us quickly discuss the exercise question. And if you are having any doubt, just let me know. Examining the following statement, come to question number 1 on page number 7.81. Yes, the deduction is for entire year. Examine the following statement with regard to provision of Income Tax Act 1961. During the financial year 21-22, Mr. Amit paid interest on loan availed by him for his son's higher education. His son is already employed in a firm. Mr. Amit will get deduction under section 80E. Yes or no? Are you agree with this statement? Yes or no? Everyone, now it's your turn to answer. Yes or no? First statement is correct or not? Can Mr. Amit can claim deduction under section 80E for interest paid on loan taken for higher study of his son? Is the statement is correct? Yes or no? Yes, very good. Yes. Why? Because there is no question in section 80E that if your son or if your child is a major or if he is employed, then you cannot take loan for their higher studies. Okay. So in this case, Mr. Amit is eligible. Subscription to notified bond of NABARD would qualify for deduction under section 80C. Yes. It is given under section 80C. In order to be eligible to claim deduction under section 80C, investment, contribution, subscription, etc. in eligible or approved mode should be made from out of income chargeable to tax. No, it is not necessary. It is not given under section 80C. Yes, Ayush, very good. When an individual repay a sum of 30,000 towards principal and 14,000 as interest in respect of loan taken from bank for pursuing eligible higher studies, the deduction allowable under section 80E is 44,000. Yes or no? No. Why? Because under section 80E, deduction is available on interest, not on principal, right? So deduction available under section 80E is 14,000. Mrs. Sheila, widow of Mr. Satish, who was an employee of Messrs. XYZ Limited, received 7 lakh on 1/5/2021, being amount standing to the credit of Mr. Satish in his NPS account, in respect of which deduction has been allowed under Section 80 CCD to Mr. Satish in earlier previous year. Such amount received by her as a nominee on closure of account is deemed to be her income of AY 22-23. The statement is wrong. Why? Because at the time of closure of account, when nominee receive the amount from pension fund from NPS, then such amount is not deemed to be income of nominee. Mr. Vishal, a central government employee, contributed 50,000 towards Tier 2 capital of NPS. The same would be eligible for deduction under Section 80 CCD. No. Why? Because Tier 2 capital contribution is eligible for deduction under Section 80C only. Right? Chalo. Question number 2. Mr. Rajan has to pay to hospital for treatment 62,000 and spent nothing for life insurance or for maintenance of dependent disabled. See, here if Mr. Rajan is paying for medical treatment of dependent disabled of 62,000, then irrespective of actual amount deposited, Mr. Rajan will get deduction of 75,000 under Section 80DD. Raja, a resident Indian, has spent nothing for treatment in previous year and deposited 25,000 with LIC for maintenance of dependent disabled. Irrespective of amount deposited by you for maintenance of dependent disabled, you are eligible to claim reduction under Section 80DD of rupees 75,000. If the person dependent disabled is with severe disability, then the amount is 1,25,000. Rajan has incurred 20,000 for treatment and 25,000 was deposited with LIC for maintenance of dependent disabled. Here also the answer is same. Why? Because irrespective of amount deposited or irrespective of amount incurred for medical expenditure of dependent disabled, you are eligible to claim reduction of 75,000, and if the dependent disabled is with severe disability, then the amount eligible to claim reduction under Section 80DD is 1,25,000. Payment of 50,000 by check to an electoral trust by an Indian company. Yes, it is eligible. Donation by company to political party. If the donation is given in cash, then the deduction is not available. But here in this case, the donation is given by way of check. So deduction is eligible. For assessment year 22-23, the gross total income of Mr. Chaturvedi, a resident in India, was 8,18,240, which include long-term capital gain of 2,45,000 taxable under Section 112 and short-term capital gain of 58,000. My dear friend, whenever if in this example, if Mr. Chaturvedi has contributed or given donation under Section 80G, then while calculating adjusted total income, you have to reduce that long-term capital gain taxable under Section 112. Remember, taxable capital gain under Section 112 is short-term capital gain deduction under Section 80C to 80U except 80G. You have to reduce from your gross total income to calculate adjusted total income. The gross total income also include interest income of 12,000 from saving bank deposit with bank and 40,000 interest on fixed deposit with bank. Mr. Chaturvedi has invested in PPF 1,20,000. Is this 1,20,000 is eligible for deduction under Section 80C? Yes, because deduction under Section 80C is available to the extent of 1,50,000. And also paid a medical insurance Premium of 51,000. Medical insurance is eligible under section 80D. Mr. Chaturvedi also contribute 50,000 to public charitable trust eligible for deduction under section 80G by way of an account pay check. Is this deduction is eligible? Yes. Why? Because the donation is given by way of check. Compute total income and tax thereon of Mr. Chaturvedi, who is 70-year-old as on 31st March 2022. Ignore the provision of section 115 BAC. Now, what is his gross total income? 8,18,240. Now, Chapter 6 deduction is also not available on long-term capital gain under section 112. So, we have to exclude the long-term capital gain for calculating the gross total income for the purpose of deduction under Chapter 6. So 5,73,240 is our gross total income for the purpose of calculating deduction under Chapter 6A. Now ATC 1,20,000 is available. He has paid 51,000 medical insurance premium and he is of the age of 70 years. So 80D limit is 50,000. So 50,000 is eligible. Now other donation is 50,000 rupees given to charitable trust. So for this we have to calculate the eligible limit, adjusted total income, yes or no? Yes. So let us calculate the adjusted total income. So what is my gross total income excluding long-term capital gain? 5,73,240 minus deduction under section 80C to 80U except 80G, yes or no? Yes. So here 1,20,000 80C contribution to provident fund, 50,000 deduction to medical health insurance premium and 50,000 under 80 TTP. Why? Because his income includes 12,000 interest from saving and 40,000 interest on fixed deposit. So total 52,000 interest. But as per section 80 TTB, as he is senior citizen, he can claim reduction of 50,000 under 80 TTB. Right? So we have to reduce the deduction available 2,20,000. So my total income is 3 lakh. My qualified adjusted income is 3,53,240. Okay, and 10% of this is my qualifying limit. So 10% of 353,240 is 35,324, and contribution made is 50,000. So whichever is lower. So lower is 35,000. Because the short-term capital gain is not taxable under section 111A. If it is under section 111A, then we can reduce the same. But it is normal short-term capital gain, which is chargeable as per slab rate. Which are chargeable to tax as per slab rate. So here the lower is 35,324. Now the 50% of 35,324. Yes, Bharat. Then 17,662 is eligible for deduction for donation. Right? So we can reduce the donation of 17,000. 80 TTB I have already explained to you. So total deduction is 2,37,662. So total income excluding capital gain is 3,35,578 plus capital gain. So total income excluding capital gain is 5,80,578, rounding off to the 10, 5,80,580. Now you have to calculate the tax. So on capital gain, it is chargeable to tax at the rate of 20%. Why? Because it is capital gain under section 112. So 2,45,000 into 20% is your capital gain tax, and the balance 3,35,580 is chargeable to tax as per normal provision, that is as per slab. So in this case, 3,35,580 basic exemption is 3 lakh rupees. So remaining 35,580 is chargeable to tax at the rate of 5%. So it comes to 779. So my total tax is 50,779 plus health and education says 4%. So my tax liability is 52,810. Clear everyone? Let us discuss question number 4. Mr. Raj Mohan, whose gross total income was 6,40,000 for the financial year 21-22. Stamp duty paid on acquisition of residential house property 50,000. Self-acquired property, if you are taking any loan or if you are paying any stamp duty or registration fee, it is eligible for deduction under section 80C, right? 5-year fixed deposit 20,000. 80C. This is also 80C. Donation to recognized charitable trust 25,000, which is eligible for donation under section 80G at applicable rate. Is 80G. And interest on loan taken for higher education of spouse paid during the year, it is 80E. So 6,40,000 is gross total income. 80C deduction is 70,000. It is less than 1,50,000. So full 70,000 is eligible. 10,000 rupees higher education is eligible. Now, for the purpose of 80G, we have to calculate adjusted total income. So what is my adjusted total income? 6,40,000 minus long-term capital gain under section 112, 112A and short-term capital gain under section 111A. So here there is no long-term short-term capital gain. And we have to reduce deduction under chapter 6A from section 80C to 80U except 80G. So section 80C and 80A deduction are there? Yes. So the total deduction is 80,000 rupees. Yes or no? This 70,000 in 80C and this 10,000 under section 80E. So what is my adjusted total income? My adjusted total income is 5,60,000. My qualifying limit is 10% of 5,60,000, that is 56,000. And my actual donation is 25,000. Whichever is lower is eligible. Yes, the lower is 25,000. And the rate is 50% of donation. So 25,000 into 50%, that is 12,500 is eligible under section 80G. So the total deduction is 92,500 and my total income is 5,47,500. Clear everyone with illustration number 4? Now question number 5. Question number 5 is very easy. It is your homework. If you are having any doubt, just let me know. If you are having any doubt, just let me know. Question number 5 is very easy. So let us discuss question number 5. Compute the eligible deduction under chapter 6A for AY 22-23 of Ms. Roma, 40 years, who has gross total income of 15 lakh. We have to calculate the only deduction amount under chapter 6A. Life insurance premium paid, policy taken on 31st March 2012 and sum assured is 4,40,000. Here the policy taken on or before 1/4/2012. Yes or no? Yes. So we have to check 20% of sum assured. So what is 20% of sum assured? 4,40,000 into 20%. It comes to 88,000. So 88,000 or actual premium paid, that is 35,000, whichever is lower. So 35,000 is eligible for deduction under section 80C. Public Provident Fund of 1,50,000 eligible for 80C. Repayment of housing loan to Bharatiya Mahila Bank, Bangalore eligible for 80C. Payment to LIC pension fund eligible to 80CCC. The limit under section 80C is 1,50,000. The limit under section 80CCC is 1,50,000 and the combined limit of 80CCC and 80CCD subsection 1 is 1,50,000. Remember? Mediclaim policy taken for self, wife and dependent children. Premium paid by check 30,000. The deduction is available under section 80D. But 25,000. Why? Because the limit is actual Mediclaim premium paid is 30,000 or 25,000, whichever is lower. Medical insurance premium paid by check for parents 52,000. Parents are senior citizens, so limit is 50,000, right? So here ATD 50,000. So total deduction under section ATD is 75,000. Total deduction under ATC is 35,000 plus 1 lakh 50 plus 20, that is 2 lakh 5,000. But ATC limits maximum deduction eligible under section ATC is 1 lakh 50,000. Under section 80CCC, payment towards LIC pension fund is 1 lakh 40. The limit is 1 lakh 50. So 1 lakh 40 full is available. So 80C and 80CCC total deduction is 2 lakh 90. But section 80CC state that the deduction under section 80C, 80CCC and CCD subsection 1 is restricted to 1 lakh 50,000. So here the deduction eligible deduction is 2 lakh 90, but it is restricted to 1 lakh 50,000 only. And under section 80D, the medical insurance premium paid for self, spouse, and dependent child is 30,000, but the limit is 25. So 25 is available. And for parents who are senior citizen, the limit is 50,000. Here the actual premium paid is 52, but the limit is 50. So eligible deduction is 50,000. So total is 75,000. So total deduction eligible is 2,25,000. 1 lakh 50 under 80C, CCC combined and 75, 80. So total deduction under chapter 6A is 2,25,000. Now your chapter of deduction under chapter from gross total income is completed. If you are having any doubt, just let me know. Thank you, everyone. So I'm concluding my session for today. Have a good day, everyone. Okay. Yes, yes.